Welcome to Dollars and Cents, hosted by Sanjiv Gupta, CPA. Dollars and Cents is the show about growing more of what you are making, saving more of what you are growing, and making more of what you are growing and saving in the most sensible and tax-efficient manner possible. Feel free to call into our studio number to be live on air with your questions. Call 408-912-5038. That's 408-912-5038. 5038. And here is your host of Dollars and Cents, Sanjiv Gupta, CPA.
Good evening, friends. This is your own CPA, Sanjiv Gupta, CPA. In our dollar update of the show, today there was a type of new tax that was trying to be imposed by Democrats, known as Billionaire Tax. Billionaire Tax. This tax was going to be imposed on America's wealthiest people by taxing unrealized capital gains. Can you even think about that? Paying tax on something which is not realized. You go to your stock trading account, and you see unrealized gain amount, and think about it. Should I pay tax on that one? No, you should not. But the Democrats try to bring this proposal, billionaire tax, on unrealized gains. Unlike other types of income, like wages, investors generally pay tax on capital gains only when they're realized, meaning when their assets are sold, compared with a worker who pays taxes as they earn it. We are not earning it. However, as per them, deferring capital gain taxes allow rich Americans to earn returns on untaxed money until the assets are sold. So they think that you can plan your taxes to be paid in the future. Well, that is something not something everybody does, right? No, they always plan their timing of the sale, timing of the income, so that they end up paying less taxes. Is it not right? This is a crazy thing happening here. Very crazy thing happening. Trying to have a billionaire tax on unrealized capital gains. Fortunately, this billionaire tax was dead on arrival after one senator that we know everyone, Joe Manchin, passed this proposal mere hours after its release. So thanks to him, we don't have this crazy kind of billionaire tax on unrealized capital gains. But we know where this Congress is headed for. Earlier, we know they were trying to give powers to IRS to look into your bank accounts, bank statements for transaction more than $10,000 other than W-2 income. That's crazy as more. Of course, we should pay our fair taxes. We should be complying with all the requirements and should be very honest in disclosing those income on the tax returns. We know that. But having a third-party agency to look into your bank statements or trying to have a billion tax on unrealized gains, where is we are headed for? I don't know. This is Sanjiv Gupta, CPA, bring this show, Dollars and Cents, every Wednesday, 6:30 to 7. Listeners, if you have a tax question, you have something to ask on air relating taxes, this is the time to connect with me on air. Studio lines are open. Studio number here is 408-912-5038. 408-912-5038 is your studio number. My firm, Sanjiv Gupta CPA, has offices in 3 locations, Fremont, Sunnyvale, and Pleasanton. We have a great team of experienced CPAs, CAs, and EAs, and accounting professionals who are well versed in a lot of areas like US tax rules, India tax rules, and also very gap basis reporting requirements, and also presenting the information which you need to do a deep dive into analysis of your financial situation when you want to sell your business, buy a business, sell a property, buy a property, or do any kind of financial transactions. Myself, not only a CPA, but also an experienced chartered accountant, having practiced in India for 12 plus years before coming to US. My team members speak multi languages and they are available year round and not just during the tax season. That's very important. My website is sanjivcpa.com, spelled as SANJIV, sanjivcpa.com, and contains up-to-date tax and financial information which can impact every individual bottom lines. If you want me to discuss a particular topic, you can always email me at Sanjiv, SANJIV, Sanjiv at sanjivcpa.com. If you have a question you want to ask, this is the time to connect with me on air. Studio lines are open, 408-912-5038. 408-912-5038. Let's go to our main topic of the show. Last time, I was discussing about the passive activity. And now I went through the details of how passive activity is treated from tax point of view and how to go about it to convert that passive activity into a real active activity so that you can claim those losses, those expenses under those activities. Today, I'm going to talk about an important area known as hobby activity. Hobby. What is hobby? Hobby is considered to be a regular activity that is done for enjoyment. That is done for enjoyment, not for investment. That is done for enjoyment, typically during one's leisure time. If the operation was a hobby, sport, or for recreation, in other words, not carried on primarily for profit, the loss would be limited to taxable income. So it's not that hobby losses can exceed the income. Passive losses can exceed the passive income and carry it forward. Hobby losses cannot exceed the hobby income if there is one. For example, a person on a regular W-2 has a hobby of taking pictures. He's very good with camera. A lot of people are good in taking pictures. They like it. My wife likes it. So if they're in the habit of taking pictures and they do some weddings, some birthday ceremonies and get paid for those pictures, that does not mean a regular activity. That's a hobby they have developed, and they're doing this for their recreation or leisure time, not making that as a regular kind of activity and not as an investment like a passive. So in that case, whatever income that we generated, the person generates from that hobby will be reported on line 21, other income, on Schedule 1 of the Form 1040. What about the expenses of that hobby income? People do ask me this question a lot. Hey, I know photography is a hobby income. If I'm not a professional in that area. I'm doing this as a lease for leisure. What about my expenses? I have to buy the camera. I have to buy the supplies. I put my car, gas into the car. And what about those expenses? Where should I report it? If I'm reporting it on line 21 of Schedule 1 of 1040, where's my expense going to be? Well, unfortunately, for hobby expenses, generally are claimed on Schedule A, mostly as miscellaneous itemized deductions, which everyone knows has been limited with the Tax Cuts and Jobs Act. They are only deductible if the itemized deductions, they are only deductible to the extent of the 2% of AGI floor. So it's very, very difficult to claim those expenses. So what is happening here? If you have a hobby and you have income from that hobby, fortunately, you can unfortunately, of course, unfortunately, you cannot claim expenses against that, those things. But if you convert that hobby into regular business activity, for example, you develop a website, spend some time in contacting customers, and make a studio in your office or home office, and have advertised your business and get registered with the city, the county, and open a regular bank account, have a credit card for expenses, so have proof of the time being spent on that activity. Then you're converting a hobby activity into a business-like activity and claim those expenses on Schedule C. So that is different. That is how we create it. Now people do ask me this question: hey, can I create an LLC for this hobby activity and convert and claim those expenses on LLC? Creating an LLC does not change the nature of the transaction. The nature of the transaction determines whether that's an active trading, active business, passive business, or hobby business. So creating an LLC or S corporation does not change that one. Remember that. So a lot of people do ask me this: hey, I formed a S corporation. I'm doing a passive investment, or I'm doing this kind of a hobby activity. I like to go for example, like taking photography, for example, again. I want to do pictures and other things. Like, yes, creating those does not mean that you can buy equipment, claims 179 deductions. No, you're not allowed to do that. Forming LLC does not change the nature of the activity. The activity remains passive or hobby. It remains that one. So what are the factors that determines what are the areas that IRS says, how it distinguishes an activity as a regular business activity or trading activity, or not trading, like passive activity or hobby activity? How will it differentiate? So IRS has provided some guidelines on this one. What are those guidelines? We have a caller here. Let me take this call. Good evening, this is Sanjiv Gupta, CPA.
Hello, good evening, Sanjeev ji.
Good evening.
Thanks for hosting the show. I had a question.
No, go ahead.
So, sir, I have a home and which I purchased it early this year, and I'm looking for refinancing. So, if I'm going to do refinancing, the question I had was, if I'm going to pay for the mortgage points, can I use that to support during my tax filing? Will it have any tax benefit or anything?
So let me make you understand the things here. So earlier, before the Tax Cuts and Jobs Act was there, the points on refinancing loan were deductible, were deducted to the extent of the total amount not exceeding $1.1 billion interest and points. But with the Tax Cuts and Jobs Act, they have changed that deduction for points, unfortunately, when it comes to refinancing transaction. In case of refinancing, the points are limited to the extent of the loan amount of $750K. And again, if your interest is already there up to the loan amount, yes, you can do it. You cannot take points. But if the loan amount is lesser, points can be taken. But again, it has to be seen. It has to be amortized over the period of the loan. Okay. I think I lost the caller. Yes, so listeners, you have any question, you can again call the studio number. The studio lines are open, 408-912-5038. 408-912-5038. So we're talking about the IRS guidelines relating to treating an activities as passive, hobby, or active. What are those guidelines? Number one, taxpayers' way of carrying out the activity. So a person has to look how is conducting their activity. Is it conducting like a business-like manner by maintaining a separate bank account, personal bank account, keeping records and books, and acting like similar profitable operational entities. So that's number one, how the taxpayer carries on the activity. Second is taxpayer expertise. Thus, he has extensive knowledge of the activity that is going to do, and proper qualification for carrying out that activity and experience for carrying out those activity, or he is taking advice from expert in those areas. That's it. Number two. Number three, the taxpayer's time and effort in carrying out that activity. So that's the other thing. We have an example. I can go to an example. We have a caller. Let me take this call. Good evening, Sanjiv Gupta, CPA.
Hi, Sanjiv sir. Sorry, my previous call got disconnected. So you were explaining on the points for the mortgage, right? I just heard it on the radio because my call got disconnected. So
yes. So point can
the loan
be
amount is more than $1 million.
Oh, so unfortunately, you cannot take the points here. But you can add you can add the points to the cost basis of the property when you sell it. That points will be added to the cost basis. That can reduce the gain. Okay.
Okay, but even up to $750K, I cannot use it. Is that correct?
No, because the refinance amount is more than $750K.
I'm sorry, sir. Your voice is not clear.
So the refinance amount is more than $750,000. Okay.
Okay. Thank you.
Thank you. Yeah. Listeners, if you have any question, you can again call the studio number. Studio lines are open. 408-912-5038. 408-912-5038. So I was talking about the time and effort in carrying out the activity. So, example, if XYZ manages janitorial service and his prime contact is with a fast food chain, XYZ also teaches 3 days a week at a local university and can clean the restaurant only late in the evening after closing or early in the morning before opening. This causes XYZ to devote much of his personal time and effort to cleaning, which could indicate that he entered into and continued it with the actual and honest objective of making a profit. That's very good example of giving example of a time and effort in carrying out an activity. Then we have fourth point is an expectation that the asset used in activities such as land may appreciate in value. Of course, that's why you're doing that business. Then fifth is a taxpayer's success in other activities. So what does it mean? It means that even if the taxpayer activity is currently unprofitable, it may be for profit if the taxpayer has been able to convert other activities from unprofitable to profitable in the past, especially one similar to current activity. Good. We have a caller here. Let me take this call. Good evening, this is Sanjiv Gupta, CPA. Hello, good evening. Yes.
Hi, my name is Abe.
Hi, Abe. How are you?
Good, how are you?
Fine, Abe. You have any question for me?
Yes, I actually wanted to just like a quick 2 questions. One was that for FBAR filing, can we still do it for this year?
Well, ESCO filing deadline was September 15. If you want to file it as soon as possible. You're delayed by a month or so. The penalties are heavy. So the penalty can be up to $250 per month per shareholder. So unless you have a reasonable cause for that, for not filing on time, if that is so, then the penalty can be waived. But again, go ahead and file it as soon as possible. Don't delay it. But September 15 was deadline for S Corp.
So not for S Corp, Sanjeev, FBAR filing.
FBAR is October 15.
Okay, but can I still file it now if I missed the October 15 deadline?
So if you missed the deadline and you have a reason to miss it, because when you do the FBAR filing, you have to choose the reason for late filing of FBAR, and you have a reasonable cause for late filing, you can go ahead and file FBAR even now. Okay?
Okay, sounds good. And I had one more question if I can.
Go ahead.
So, I have some, some income that I get from, when RSUs are released by my company. Is there any way to offset that or, save on that? Because, the moment, they get all reported in W-2s. So, is there a way to do anything so that the taxes are, can be reduced?
So, Abe, this year we are doing consultation in lots. And most of the consultation are in the areas of RSUs, ISOs, options,
Right.
ESPPs, and all those things. So because of those stock options, definitely your income goes up, your W2 income goes up. So what the best options here? We have a lot of options. We can do one-on-one basis consultation, but generally, for the benefit of listeners and the benefit of you, generally you can look into offsetting it with respect to if you have any losses in your portfolio, stock portfolio, or kind of doing some kind of charitable deductions into that, like donor advised funds, and also look into, of course, if you have stock, not the RSU exercise, because you can't do nothing with W2 income. But if you are selling the stocks and you have short-term or long-term gains, then you can look into qualified opportunity zone funds, which are important investment also, which can defer the taxes for now, and the growth can be tax-free over a period of time. You can look into that as well. So yes, you have a lot of other options, but definitely we can do. If you can connect with me after the show, then we can. I can discuss with you on one-to-one basis. Okay.
Sure. Actually, I'm an existing client of yours, so I think I still have to take an appointment to we can discuss that over sometime when you get some time to go over this.
No problem, sir. Okay.
All right. Thank you.
Thank you. Yeah. So again, listeners, this is where we are coming to 4 minutes are remaining for end of the show. So if you have a last minute tax question, you can connect with me on air. 408-912-5038. 408-912-5038 is your studio number. So we're talking about the areas where I just look into whether your activity is passive, business, or hobby activity. So one area was we were at point number 5, which was about taxpayer success in other activities. Then we have point number 6, which is taxpayer history of income and losses from the activity. So generally, we have said that if you have losses in that activity for more than 3 years, that activity is not for profit. It's more like a hobby activity or a passive activity. So remember this, you cannot continue running a business which have losses. Of course, there are people who come back and say, hey, I'm doing product development. I'm putting money into all those. I'm paying to contractors. I'm putting my money into it. The product takes time. This cannot be done in a 1 year or 2 year. Maybe it takes more time. So if you have a reasonable cost and really you are putting that money and really you're hiring people and really paying them and really issuing 1099, of course, then you can claim all those things. But remember, there has to be some reason why you're doing this, right? You just don't want to waste your money in paying those contractors if you're not going to make anything out of it. So that's definitely one thing you have to take into account, that losses from that business. If you have continuous losses, definitely it's a problem. Then we have a taxpayer financial status. Of course, that's important. The financial status of this taxpayer is an important area where you can look into it. And the most important other factor is if there's no profit motive, it indicates lack of profit motive. Okay. If there's no profit motive, like I said, there was no intention of developing a product. There was no intention of doing something to create something for on a long-term basis. Definitely that will be a problem, because that motive does not say that you are doing this for making a profit. So those are a few areas where I just do look into it, but to classify a particular activity into a business or a passive or a hobby activity. A lot of people get confused, and in an audit, a lot of times IRS becomes a winner, and they disallow a lot of things in this. So be careful on that case. So you have to remember there are 3 types of activity: hobby activity, passive activity, and business activity. And all rules are totally different. Rules are different for each activity. My website, sanjivcpa.com, has a lot of information. You can always go to my website, Sanjiv CPA, to get up-to-date tax and financial information. If you have any question, you can always email me at sanjiv@sanjivcpa.com, which I can take that question for the benefit of listeners in my show. And of course, it will be for everybody's benefit. The Sanjiv Gupta CPA bringing this show every Wednesday, 6:30 to 7 p.m. I hope each one of you have taken the booster. If you are applicable, take those boosters and just keep safe. Still, COVID is still there, so just take as much precaution as you can. I know people are traveling, but just be careful on that account. Thank you. Really appreciate it. Thank you for listening to my show.
Thank you for tuning in today to Dollars and Cents, hosted by Sanjiv Gupta, CPA. Tune in next Wednesday and every Wednesday at 6:30 p.m. If you have any questions about the program or its related topic,